Good morning. Welcome to Stock Market. Today it's Wednesday, November 4th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. And we also give you daily stock ideas to consider. That hits your inbox every trading day before the market opens. So election day yesterday, as of the recording of this show, we do not have a declared winner of the election, but let's just dive right into what's happening in the markets. U.S. equities were higher on Tuesday, stocks adding to Monday's rally. Most sectors were higher, with industrials, financials, and consumer discretionary leading. Energy was the only sector to close lower on the day yesterday. Treasuries were weaker, with the curve steepening. The dollar was down on the major crosses. Gold finished up 90 basis points. WTI crude settled up about 2.3% on the day. And as we get to the desk this morning, futures are up 30 basis points for the S&P 500, though it is a mixed bag across the board, and trading overnight was certainly volatile. Treasuries are rallying and the curve is flattening. The 10-year yield is down to 79 basis points after trading as high as 94 basis points overnight. Dollar seeing good gains on the major crosses, but off the best levels of the overnight session. Gold is down 1.2%. Crude oil is up another 2% here on Friday morning, where for all the back and forth, as I've been saying, the structure of the trends in the market has not changed. What is interesting is I think investors' hands were tipped last night. And by that, I mean, you could see the way that certain assets and certain areas of the market were trading as the odds of one candidate or the other ebbed and flowed, right? So as President Trump started to see increased odds in the betting markets, you started to see treasuries rally. You started to see NASDAQ futures rally while small caps sold off, right? So it appears that, the confirmation that everybody has had, that investors were positioned for some sort of blue wave, was certainly priced into the market, or at least investors were positioned that way. And you could see it in the ebbs and flows if you were watching how futures markets were trading alongside some of the betting markets and some of the early calls coming in from the States. So I thought that was interesting, right? As we get to the structure of the market, though, not a ton has changed, right? Bigger picture, trend perspectives, not much to say differently here. SPY 320 is key support, 340 near-term resistance. And we kind of ticked up there yesterday. We'll see if we give it a go at 340 again here this morning. For the Qs, 260 is support, 280 is resistance. And for the small caps, support down a little bit lower in the 140 to 145 range. All three of the major market ETFs remain oversold by our work. So again, investors' hands were tipped last night. I think it's kind of interesting, and I always kind of like to see the game theory and how investors are positioned in the market, and it gives you kind of a sense of what's priced in and how things may continue to move. It's unclear how much of those trades were unwound or reestablished in volatile trading last night, obviously, but we'll see the trends develop over the days and weeks ahead. And that's why I think it's important to have a roadmap and to be focused on these key levels, which is what we're going to continue to do here. Let's hit our market in a minute. Stocks advance on election day, and I gave you the key levels to watch. That's what I'm talking about in our note today when I do a midweek update on the major market ETFs, just kind of laying out the roadmap as I see it for the Qs, the SPY, and IWM. Long-term treasuries are sitting on support, and as I said, they were volatile overnight. Sentiment more fearful this week, and as I said earlier, futures do point to a mixed open here today. Taking a look at the power bars now. Some shifting back in favor of the bulls with 2 days of a strong rally. The Dow, not so much. The Dow was up 2% yesterday, but still 1 to 5 bulls to bears there. The S&P 500 flips back bullish, 123 to 94 bulls to bears after a 1.73% gain. And the NASDAQ moves higher by a like amount and sees its ratio tip back in favor of the bulls as well, 18 to 16 there. Small caps were your outperformer on the day, 726 to 273. We'll have to see how those trade this morning. Bonds down, sending yields higher. Industrials, your best sector on the day, up nearly 3%, 12 to 9 bulls to bears for the XLI, the industrial sector ETF. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board, however, are mixed. Let's hit our stock of the day now, and just kind of taking it aside and just kind of sticking to the facts and looking at things from a trend perspective. Westlake Chemical, it's a name that we've talked about in the past, reiterating it here today. Westlake has a bullish Chaikin Power Gauge rating. The stock is in a strong trend above the rising long-term trend line. And we've been saying for a while that chemicals are a strong industry group. So when we think in terms of the types of names we want to own, Westlake Chemical certainly deserves a spot on that list. The question then comes down to timing. And I always kind of find it interesting when a stock is at or near a 52-week high, but is also oversold, right? Take out our overbought, oversold indicator here, and we can see that we are rounding up and out of an oversold position as Chaikin money flow spikes back to the positive side. And more importantly than a lot of the other things that we've talked about already is the fact that relative strength is reasserting or actually becoming more intense in its outperformance against SPY. So Westlake Chemical is a name that looks kind of interesting here after it closed at 74.01 yesterday, up 4.34% on the day. Now, obviously, there's going to be a lot of ebbing and flowing here in the days ahead. And until we have some clarity on who is the winner and see how things shake out as it relates to the election. But I'm going to continue to come at things from a market perspective and let the trends develop. And what I see here is potential for a breakout on a stock that's oversold, outperforming the market with bullish money flow and has a bullish rating. So just kind of stick to what I know and not guess at what I think might happen at the bigger picture level. Let's take a look at what the sector tracker has to say. Movement of the major sectors over the last 5 days. Materials and industrials, our two favorite cyclical areas of the market, are at the top of the list. So that's encouraging to see. Financials, interesting. Remember, we showed you the banks yesterday. Financials potentially on a relative basis, trying to carve out a bottom. I think that's a hated area of the market along with energy. And as we've seen the curve steepen, financials have done well. Now, was the curve steepening, the market pricing in a blue wave? If that was in fact the case, and it does appear so, the lack of a blue wave would probably cause the curve to flatten and may start to weigh on the financials again. So just kind of, there's a lot of moving parts here. And as I said, with treasuries this morning, they're rallying and the curve is flattening. Energy and REITs round out the groups that are higher. Energy, we've talked about it. It's hated. Utilities, staples, and healthcare are middle of the road. Comms, discretionary, and tech are at the bottom of the list. Tech was in focus in the overnight session last night, moving with President Trump's odds, right? As President Trump's odds of winning increased, tech rallied, and they ebbed and flowed with those odds in some of the betting markets and some of the calls that were being made. So just, again, investors positioning really tipped last night. Tipped in terms of we saw their hands. Industry focus today, healthcare services. We looked at equipment yesterday. We'll look at services today. Past 6 months, it's been a good group, outperforming the S&P by over 15%. Power bar ratio, very strong, 23-3 bulls to bears. Earns it a spot of number 5 of 21 subsectors, having moved up 3 slots over the past week. So if we were thinking about some names to take a look at within that group, see if there's opportunities, Universal Health, UHS, McKesson, MCK, and Owens & Minor, OMI, all have very bullish Chaikin Power Gauge ratings and are all holdings in a fund that is breaking topside from a near-term consolidation, right? So big sell-off with COVID, rally, consolidate, and then a break to new highs. And again, just as we were talking about with Westlake, I was kind of like to see stocks or funds breaking to new highs while being oversold. Money flow mixed to slightly bullish. So we have a bullish fund outperforming with the intensity picking up. It's oversold with bullish money flow as it ticks at a new high, right? We can try to guess at what's going to happen with election results, or we can actually look at what is. And right now, what is healthcare services breaking to a new all-time high and continuing to outperform the broader market. And if you drill down on the holdings, there are 23 bullish names within this ETF that might be worth taking a look at. Taking a look at what's trending now, yesterday's movers and shakers, our gainers and losers. A lot of this earnings related. Remember, in the heart of everything that's going on with the election, we're still in the heat of earnings season. Arista Networks up 15% following their print. AIV, I actually didn't see anything company specific there, up 12%. Gartner IT earnings send that stock higher by 12.5%. Zebra earnings report solid enough for investors, up nearly 9%, and Catalent CTLT up 7.8% on the heels of their print. Mosaic disappoints, and that one's disappointing for me personally. I owned it, and it's a name that I've been bullish on, and didn't pan out, right? I have this view on the ag names and agricultural commodities as part of an inflation trade. I thought the fertilizer stocks looked compelling, and then earnings from Mosaic and Nutrien took the stocks down, or quite frankly got it wrong. That's why we manage risk, but that stock down 12%, also caught a downgrade yesterday. LEG down 4.7% following their earnings. PayPal earnings not well received, down 4.25%. CF, another fertilizer name, goes along for the ride with Mosaic. They are scheduled to report tonight. Cabot Oil and Gas is a very bearish stock, down 3.5% on the day. Nothing company specific that I could see driving trading in Cabot. So unfortunately got the Mosaic wrong. So risk management has to take hold. That's why we think about stops. That's why we think about knowing where to get out if the market tells us we're wrong. So Mosaic certainly fits the bill there. Let's look at the charts now. Sentiment more fearful this week as the market sold off, and despite the subsequent rally over the past couple of days, the 13-day moving average of the CBOE options put call ratio, the equity options put call ratio, has ticked higher. Now, again, we're still in an area of greed, right? Excessive greed, if you will. And we've been mired in that position for months, right? We've been showing you this chart every Wednesday for the past few months, and we've kind of just been stuck in this excess greed position. Now, it has backed off of that greed level a little bit. We can say that it moved toward fear, but still very much in the greed camp, which kind of contradicts what we're seeing with the VIX, as the VIX has creeped back up into this kind of zone between 35 and 40. So the VIX elevated while equity options investors remain bullish, less bullish than they had been last week, but still extremely bullish. So kind of an interesting view there. I took a look at the CNN Fear and Greed Index, and that's now in a fear position. Moved down to, I believe, a reading of 32. Let me kind of confirm that for everybody here. I go through that in my note. Yep, 32 this week from 47 last week, moving into a fear position from a neutral stance. So sentiment, you would argue, has turned more fearful this week, right? Nothing that really jumps off the page, but certainly moved in the direction of fear over the past week as the market sold off. And we'll see how that shakes out with, as of this morning, us not knowing who the winner of the presidential election was. And we'll continue to monitor markets, trends, and dynamics as that plays out. Taking a look now at some of the areas of the market that I just jumped out to me, right? Everybody obviously watching equities last night, but I thought the long-term treasury market and the treasury market in general is kind of interesting because that, similar to what the NASDAQ did, ebbed and flowed with the president's chances or the vice president's chances as the odds were shifting around in some of the betting markets, and some of the early calls were coming in. So we can guess at what it's going to be, or we can go to our roadmap, which we always prefer, right? So consolidation playing out in long-term treasuries with support at the kind of 153 to 155 level. A break of that support level opens the door to a move down to 140, in my opinion. On the upside, we've had a series of lower highs and a break of 161, which lines up with the 50-day moving average, would change that dynamic in the near term. So in between, it's easy to get chopped up. I'm watching for a break of trend one way or the other to kind of establish more of a view from an objective trend following perspective. And then solar stocks also are going to be in focus. I think solar stocks are clearly pricing in some sort of a blue wave. They're under pressure this morning. Here's the TAN, the Invesco Solar ETF, above the 50-day moving average, above the 200-day moving average. Now, if they were to break down, I gave some Fibonacci retracements levels. I think we'd be looking 55 is the 38%, 50, I'm called 49 is the 50%, and 42 is the 62% retracement level. So just some areas to think about and how they line up in the days ahead. That's going to wrap us up. Be well, be safe. Take us for a test drive. I'm back with you tomorrow.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.